Thank you.
Emmanuel's in. That should be all the panelists.
Hi, Mr. Donikwame. Welcome. Thank you for joining.
I don't think his mic is working.
So I think we can go ahead and set the settings and go ahead and start allowing the guests.
Yeah, the guests are in, and we got all the panelists, so we're ready to start.
We still have Dorcas, who we're waiting for, right?
Dorcas is in, Lydia's in, and Emmanuel is in.
We're all in. We're
Brilliant.
all in.
Yeah.
Brilliant. Okay, then we can start. All right, then. Good morning, good afternoon, good day, everyone. And thank you for joining and joining early. My name is Dio. I work for TradeStream in the Africa region. And I want to say a huge thank you to you for taking part of your time today to join us for this webinar. For anyone who might not know who exactly TradeStream is, we are a company that was set up by trade experts and trade and banking experts for the business of trade finance. We are not just a tech company that happens to do trade finance. We are a business of trade experts who are using technology to transform trade finance. In our 5-year journey as a company, we've gone from our founders being called crazy or mad, because of the kind of ideas that they had in terms of transforming trade finance, to people now coming to us and saying, can we become a part of what it is that you are trying to build as a company to enable trade finance globally. What we do and our vision is to build a platform that enables trade finance across the world. We are hoping that we can effectively change at least 60 to 70% of global trade around the world. And this series is a part of that commitment to changing the world of trade as a company. We believe that true transformation can only happen within the trade industry when the main players within the industry come together, discuss the trends within the industry, and basically agree, ways of moving the industry forward. So our approach isn't just changing the industry from a tech standpoint in terms of creating a platform for that change from a tech standpoint. We are also aiming to change the industry by creating a platform for conversation, for development of innovation. And this series, which we actually do across the world, is a part of that platform that we are building. So thank you very much and welcome. I will go straight into introducing our panel for this morning. We have Dorcas Mugambi. Dorcas is the head of wholesale banking at Coop Bank in Kenya. She holds an MBA in marketing and operations management from the University of Nairobi and has been a career banker for more than 20 years. She has similar experience in international trade finance. And when she's not putting herself into trade finance, she also doubles as a coach, a life coach, loving to inspire and bring the best out of people. Welcome, Dorcas, and we're happy to have you. Second on our panel is Lydia. Lydia is the Director of Transactional Banking and Corporate and Investment Banking at Absa Bank, Kenya. She has over 20 years of experience in the banking industry, working within the East Africa region across Kenya, Uganda, and Tanzania. She has been with Absa Bank for about 6 years, having joined from Standard Chartered Bank. Prior to that, she has also worked in NIC Bank. In her current role at Absa Kenya, she provides direction on cash management, short-term working capital solutions for corporate and business banking clients. She is also passionate about digitizing the solutions that the bank offers its clients, having been extensively involved in spearheading online banking platforms in her career and structuring cash and trade finance solutions for clients within the region. She has a background in information system, holds a BSc in international business administration from the United States University of Africa, and she is an associate of the Kenyan Institute of Bankers. She also has an executive, she's also a graduate of the executive program for women of Kenya's employers in conjunction with the University of Oslo. Thank you very much, Lydia. We are happy to have you. We also have with us Emmanuel Donny Kwame, who is the Secretary General of the ICC in Ghana. He has led multiple conversations across the continent and in Ghana especially around changing the world of commerce in Africa and across Ghana as a whole, with trade finance enhancement as part of the key initiatives that he's driving within the country. Thank you very much, Mr. Donny Kwame. We are looking forward to having this chat with you. Apart from that, we have our own, our very own Jerry Shukule. Jerry leads trade streams efforts across all of East and South Africa. He has been in the tech industry for almost 20 years, engaging leading executives and managers across the financial services industry within the continent. He has worked in various parts of fintech, including digital banking, trade, of course, payments, and customer management. Thank you, Jerry. Finally, our moderator today would be Andre Casterman. Andre is an ex-Swift person, so he knows the trade business as much as anyone. And he was at Swift for 24 years. He has been active in the specific to trade finance fintech since 2016. Andre works now with the ICC and ITFA, where he chairs the fintech committee comprising 40 members globally. TradeStream, as you may know, is a member of the ITFA, and Andre is going to be leading the conversation. So I will hand over to Andre right now. Just a few background rules before we start. Please, if you have any questions, kindly type them into the chat section of the room, and we will try to take as many as we can. Also, to let you know that this session is being recorded and would only be shared on the basis of information for everyone who has attended the session. Thank you very much. Andre, please take it up.
Thank you, Dayo. A pleasure for me to be here with all of you today. And indeed, let's get into the topic of the future of trade finance and how Africa is preparing to reshape it with technology. We indeed have seen a lot of developments on the fintech side, and I've been part of this since many years actually. But first using in the name of Swift, and since 6 years, 2016, indeed, working with a series of fintechs. And what I really like about the activities I have seen over the last 6 years on the fintech side is the high degree of specialization and the high willingness of fintechs and now also banks to collaborate. And I think there is a dynamic on the trade side that is quite different from the payment side, whereby those technology companies, and indeed I have a network through ITFA of 40 of them, those technology companies are really willing to collaborate with banks. There is no competitive element here. And this competitive element we see sometimes definitely on the retail payment side, sometimes on wholesale payments as well, but definitely in trade finance, the fintechs are partners, are really becoming trusted partners for banks. So it's very exciting to see all of those changes, as well as additional changes where obviously technology is becoming an objective, not just an option anymore. So I'd like to start with the first question for Lydia, if that's all right for you. And as a banker, I'd like to see, how do you see indeed trade finance evolving in Africa today, possibly being reshaped? That's the discussion we're going to have. And so in this evolution, what are the top priorities for banks on the African continent, Lydia? Maybe you have to unmute yourself.
Thanks, Andre, for that question. I think in terms of what we've seen in the market, and that question is very relevant in the space that we are in right now. One of the things that we've seen happen, especially in the COVID scenario, is that digitization has become a mechanism of increasing accessibility to trade finance. And I think more important, especially for SMEs, we've seen closing in the gaps in terms of trade finance is a key mechanism of helping them, especially achieve better credit and cheaper credit, if you like it. And I think it's also helping in terms of creating or closing in on that gap on trade finance and the knowledge of trade finance. I think trade finance has previously been seen as a complex activity, but I think it's opening up, and I think it's also opening up a supply chain as a result. And then digitization of trade has always been at the front mind of the community. And I think the other thing to note during the COVID-19 pandemic, this has accelerated significantly, and brought in transformation for the SMEs. I think, for example, like in ABSA, when we launched our brand, our key driver is innovation, and we focus on our SMEs to just make sure that we focus on that and looking at the whole value chain from the retailer all the way up to the corporate, and to just see how can we solution for them and make sure that everyone is benefiting, because we felt we focused a lot on the corporates but left out the end of the train, which is the one that brings value to that, for example, the FMCG. So that you will not be able to perform trade in the coming days if you haven't digitized your operation, be it from the front end all the way to the back end. And I believe we'll cover that a lot more in the following sessions. But digitization is at the core of most banks and at the core of most of the operations, even within the corporates, the SME. The SMEs are beginning to really appreciate that. Thanks.
Thank you, Lydia. Let's hear the input from Dorcas as a second banker on the panel. If you don't mind, Dorcas, and then I will ask Emmanuel also to comment on this evolution of trade finance in Africa.
Thank you so very much. Indeed, Lydia has nailed it. And I would say, just like Lydia has said, indeed, for the trade finance, the market is really opening up, and most customers, and especially the SMEs now, are looking towards, better and, better ways of making good decisions. And the only way they can make good decisions and in a better turnaround time and even have efficient systems is where they are able to have full information. We are coming from a season or a time where customers did not have full view or full information. And out of that, they were not able to make, very critical decisions around what kind of solutions they can be able to utilize. And out of that, then a customer would not be able to know what kind of solution or what kind of product to go for. So with, of course, information opening up, more and more customers then are realizing the need of trade finance. And out of that, then they are engaging banks, to be able to get better solutions, which then address even, address their bottom line, because trade finance offers solutions that more cost effective as compared to the traditional solutions that we have seen in the market. So with, of course, the value chains and ecosystem banking, then banks are also able, much more able to give a customer a comprehensive solution, which is more cost effective, and more importantly, which really addresses most of the challenges that we'll be talking about even as we move along, that have affected most customers, especially in the SME space and of course even in the retail space. That is what I would say for that area. Back to you.
Thank you, Dorcas. Emmanuel, from a ICC perspective, so less commercial perspective, how do you see this evolution happening? If Emmanuel, I hope the mic works. Emmanuel, is it possible for you to help to respond, or you have issues? Otherwise, let's move on, and we'll come back to Emmanuel a bit later. So Dorcas, we hear often trade finance is facing a lot of challenges and hurdles. What is the situation on the African continent, and what are the major hurdles you're addressing when financing mainly the SMEs?
Thank you so very much. And really, that's a very good question. Of course, there are a couple of hurdles that we find ourselves in. One, remember what we'd call MSMEs or SMEs. These are customers who initially did not even have their own records, even keeping their own records. So most of the times when they come to the banks, of course, for solutions, there's a lot more we need to do in terms of even having their bookkeeping in good place for us to be able to support them. And out of that, then a lot of information is not available. And because a lot of information is not available, then appraising or analyzing this segment of customers also becomes a very big challenge. So what banks really are doing is to try to using the supply chain to try and see how then you can be able to use information collected within the supply chain to support, build information that is relevant for you to be able to finance this, this segment of customers. Number two is matters KYC. Indeed, we do not operate, in isolation, just like the rest of the world. KYC has played a central role, especially today, in every conversation that has to do with the customer, whether it is a trade finance, a transaction, or any other transaction, even a customer just opening an account. KYC is such a big, subject that really need to be addressed right from when you get hold of a customer. Why? Because definitely for obvious reasons, and of course, as banks, then we have to be very extremely careful on how to conduct such know your customer, have conversation, and even what kind of supporting documents to have for you to be able to have some solid information around who your customer is. The other bit that we find ourselves, struggling with in the area of trade finance is really the area of risk mitigation, or risk overall, because again, as I said, some of these customers that we're talking about, yes, indeed, some of them are either startups. Some of them have been in the business and may not have been in the business for a long time. So their track record is not as much as, that big corporate or that global corporate that you can actually just do name lending. So out of that, then, the banks find themselves in a quite some awkward position, especially in terms of, being able to do a proper analysis for these kind of customers. And that's why then the conversation around supply chain becomes very important, because then you're able to get information around the value chain that each customer is operating in, either through backward integration or forward integration. You can be able to get some form of information. Finally, also bearing in mind again the amount of time these customers have been in business. Again, most of them may not have enough collateral or sufficient security to be able to place, especially for some of them products that they may require from time to time from the bank. And then, the bank has to, to look for other ways of supporting the customer, whether it is through structured trade finance or commodity finance, or again, around the same area of supply chain finance, because then you are able to look at receivables as opposed to historical data, which may not be available. And, finally, then is, again, looking internally within the banks. Again, trade finance, of course, is really document-based. It's document-based. And many a times that when you open, whether you issue an instrument like a letter of credit or a bank guarantee, it comes with a load of documentation, which again can be cumbersome, whether it's in terms of record keeping, and even being able to analyze and store in a safe area. So all these things are really some of the things that we struggle with, and I believe sometimes having had discussions with most fintechs, then you're able to see how to close the gap based on some of the solutions that they offer.
Very good, thank you. Dorcas, for your insights on this. Indeed, still major hurdles. I think, yeah, trade finance is late to the digitization party. We heard that since a decade or so, and there were many initiatives trying to address those hurdles. But indeed, now technologies have evolved so much that trade finance can take advantage of those latest technologies, such as indeed digital documents, AI, and other ways to digitize and also be able to share information that you can integrate and trust in your risk assessment process. Lydia, I'd like to indeed focus more on this and ask you what is expected on your side from technology in the short term. We have talked about front to back office digitization and supply chain finance. So where do you see technology helping you in the short term?
Okay, thanks, Andre. And I think Dorcas has also touched a little bit of it. But I think, looking at trade finance, And given that it's very, very document heavy, there's definitely, for any organization or for any bank, it will be important that you invest in where the world is going, and where we see, if you want to actually accelerate your trade growth. But I think from a strategic perspective, or even in the short term, what we have seen happen is really a multifaceted approach. So we have to improve our back office automation so that you achieve efficiencies and create scalability in the back office. And through that workflow, then you can also generate more clients through that, and improving the turnaround time that you take in terms of processing documents. So I think it also improves on your risk management in terms of increasing, because compliance and regulation is becoming stringent by the day. We cannot run away from that, and I think that's what we were addressing earlier. So with that in mind, you have to take the perspective of risk management, increase the compliance, requirements, and improve on that from your back office and the workflow in terms of the data, what you do with your data. The other thing that we are trying to do as well is providing greater access and convenience to our customer through our trade finance solutions. It will help in terms of addressing liquidity. We talked about the supply chain. So if you have the full view from end to end, so that means you will be able to offer your clients specific solutions around that, and allow credit to be easily accessible and also cheaper from that perspective. So you address both liquidity and you address issues around that, how you service your clients. So you look at your post-shipment finance, be it the payables, the receivables on the finance, and the risk mitigation around that. So if you have all your data in one area, then you're able to tackle risk, tackle the service to your client, and tackle your growth aspirations. Thanks.
Thank you, Lydia. Indeed, I understand that it's important to digitize, to automate, but to keep on using the same the same market practices, the same instruments, such as the letter of credit. So I think that's also an area where the fintechs score in terms of not trying to change what is working. The letter of credit is very well recognized and understood by the market since decades, if not centuries. So rather than trying to change the instrument, let's see how we can increase the efficiency of the instrument. And that can be done indeed in the back office, also partially on the front office, to have validations very early on, for instance. And that's also what I like in my experience with the fintechs. Thanks to their specialization, they are not trying to change the whole process, because changing the whole process takes so much time, and sometimes is definitely not needed. So they're trying to indeed bring value propositions and technology that is introduced as an add-on to the existing technologies, whether that's a back office system, a front office system, or a channel like my ex-employer Swift, which is working fine as well. So that's also a very strong advantage of those highly specialized fintechs. So I'm not sure Emmanuel managed to join us, but I invite him to speak up if he manages to join us on the virtual stage, because I have a few questions for Emmanuel. But in case he can't, I'd like to ask Jerry now to join us indeed and tell us how TradeStream helps indeed financial institutions to address those specific automation requirements. Jerry?
Thank you. Thank you, Andre. And good morning, good afternoon. Indeed, I think one of the areas which banks are looking at to increase revenue and improve their efficiencies is around trade finance, and this is a great push across the region. The bigger concerns around banking have been, or rather around trade finance, have been, improved turnaround time, regulatory compliance, for example, getting end-to-end, solution that would help customers onboard or initiate the trade finance applications of these instruments, and then ultimately, of course, facilitating the process from the customer end all the way into the bank end, and retain knowledge, because what has happened in the past is that this knowledge that a lot of trade finance players have had, as soon as they move away, it goes with them. So banks have grappled with retaining this knowledge. At TradeStream, we help banks automate this process, and of course, using very, very up-to-date technologies such as OCR, optical character recognition, AI, artificial intelligence, and we automate the entire trade finance process all the way from the corporate side and to the bank side. And in this sense, we help banks, reduce their risk, reduce resources. There are those processes that would take 2 days, 3 days, almost 5 days, being cut down to just a few minutes. And since trade finance is a paper-centric, a very laborious process, it requires, or it takes a lot of resources in terms of getting these transactions executed with less risk. Now, at finance, since we have automated this process, we actually help the financial sector mitigate risk and manage the business continuity, especially in this season of COVID, where a lot of us are not physically interacting. So that interaction, especially from digital perspective, is critical, especially for this industry. Now, at TradeStream, we've facilitated and ensured the continuity that a lot of these financial sector players require to carry on trade finance transactions across board, from the initiation to the processing to the document checking and to the back end. So because we are able to, the TradeStream platform can actually integrate easily to other back end applications whom we are actively working with to facilitate an end-to-end ecosystem. Thank you, Andre.
Thank you, Jerry. I had an additional short question for you, because we often talk about platforms where both parties need to join a common platform, like two banks join SWIFT to exchange messages. Is TradeStream working in a similar way, or can TradeStream be adopted by one bank independently of what the other banks are doing?
Fantastic. So TradeStream is very, very dynamic in a sense that the platform can be adopted independently, or if there's a group of institutions that intend to collaborate. We're happy to explore those alternatives. So number one is we provide a standalone. We create a premise for you on the platform as an organization, and we customize it to your very, very specific requirements in terms of trade finance. And then should you want to plug in other other institutions, other corporates and the likes, we can facilitate that accordingly. So yes, it's a very, very dynamic platform that can accommodate both independent, standalone, and associated organizations.
Yep. So clearly here also we have an example of a technology that integrates into an environment that addresses a specific need to automate the checking of documents, and that is working alongside existing e-banking, back office systems, and the various channels and additional technologies that banks or corporates would use. So no disruption to the existing process, but a gradual improvement, an incremental improvement of the whole digitization and automation of documentary trade finance. Okay, very good. One more question for Dorcas in terms of additional trade finance technologies or market initiatives that African banks are working on. Can you tell us, you already mentioned, as well as Lydia, supply chain finance, are those or are there specific platforms or consortia being built on the African continent that we should be aware of?
Thank you. Indeed, we are seeing a focus on quite a number of things. Of course, with the emergence of various fintechs, there are so many solutions that we are seeing happening around the market, and out of that, then some of these solutions really are around how banks can connect with various businesses. And we have seen a trend of B2B integrations. Sorry.
Very good.
I don't know if I'm having an echo. Okay. That's better. Yeah. So yeah, what we're seeing a trend around B2B integration, where organizations, of course, focused more on integrating with the banks. This creates efficiency and, of course, reduces some of the inefficiencies we see with paperwork. In the past, or traditionally, of course, what we have seen is, a customer comes and, you want to confirm the document is valid, and, you have to do the verification checks. But, with, the B2B integrations, then that is minimized because, of course, that gives it the validity and, of course, it reduces the risks that we see on that area. We are also seeing a lot more, of course, as I said, speaking to many other areas. Of course, we have many payment facilitators, and of course, these payment facilitators will want to use the bank ecosystem to be able to make, whether it is payment or to be able to do more efficient, to become more efficient in their collections. And out of that, then we are seeing more people requesting for services like open banking, and it's an area that quickly is gaining traction, and also offering a lot of efficiency in the way the businesses are being done. Yeah, and of course, we did talk about supply chain and both the distributor side of things. And looking at distributor side of things, of course, banks would want to utilize most of the information to be able to analyze the end users or the end consumers, whether it's on the retail side or on the distributor side. And out of that, then, we're also seeing banks wanting to integrate with certain manufacturers or certain big distributors so that they can be able to use that data for purposes of either on lending or for purposes of, supporting the ecosystem. Yeah, I think that is what I have on that side.
Yeah, a busy agenda, definitely.
Yeah.
Building on this, Lydia, how do you see the trade finance operations evolve in the next two to 3 years?
Thanks, Andre. Thanks, Dorcas. Need I say more? Because that's really what Dorcas has talked about, is really what the market trend is. And you cannot be left behind when it comes to the trade back-end integration, from front end to the back end. And I think it's a journey that we started off pretty early. And as I mentioned earlier, as ABSA, when we launched and relaunched our brand, it was about innovation, and we're really focusing around innovation, digitizing our operations, not just on the trade end, but end to end, so that we can improve the client experience. But I think more importantly to note, there's various trends that are coming up. So you find there are lots of partnerships that that will come up and that will require you to integrate with the partners. And also you also find that, as we mentioned earlier, the supply chain financing keeps coming up, and that's why the partnership environment is really going to grow. And you cannot work alone as a bank. You need to look out there. If I think there was a research that was done by, the Harvard, and it showed that Kenya and Nigeria particularly are hubs for fintechs. So we will not fail to see the fintech taking place here. And, the AI is taking preeminence in everything we do, even in our trade finance operation. So there's going to be a lot of usage of AI, even when you look at your risk assessment, parameters. So that's going to play a very big part. But I think increasingly we are seeing our clients saying, on the payment space, which has really advanced in Kenya, you find that most corporates, have always, they don't want to walk to the bank or to bring manual. They have, enterprise resource planning programs have, the ERPs have really advanced at very high level, and you have various modules or programs that operate, be it HR, be it your supply chain. So all that is integrated. So what the corporates are saying, even for the trade, so that I am able to tell on my supply chain, are you able to integrate not just on the payment space, but also on my trade finance, so that I can have one single view of my operations, and so that on a daily basis, be it the treasurers, because a lot of them, you find that you have centralized treasurers, so they want to see a full view, and they don't want trade finance to be left behind. So I see a lot of integration from that perspective, from the corporate space all the way to the SME, and that gives you a strong space to play as far as the data data is concerned, and that helps you from corporate, from the bank, and the end consumer helps us to make decisions around that space. So that's what I see. So full automation from the corporate, the bank, and the end consumer. Thank you.
Thank you, Lydia. Definitely, we see the additional benefits brought by digitization is not just to move away from paper, but it's indeed to offer much more that we could not offer on paper, such as visibility, indeed in real time, of exposures, of transaction status, and the tracking of those various transactions in order to bring the right information to the decision makers. And that is something that with digitization of the whole process and the documents, that is becoming possible. And indeed, this is a story of 20 years ago in the treasury side with centralized treasury operations. When SWIFT started to connect large corporates, the focus was on cash visibility. But I think this same need for visibility on operations and transaction status is key here, and that indeed where technologies such as TradeStream can help, because all of the data is understood, is digitized and processed, and more use cases are possible for sure. However, there could be some hurdles on the regulatory side. Are you getting support from regulators when it comes to digitizing some documents that are still required by law to be based on paper, or data sharing, or the use of AI for some processes like credit management? Are the regulators involved in this and supporting this evolution and this increased use of technology? Maybe Lydia?
Okay, sure. I think the central bank, for example, in Kenya is very clear in terms of automating most of the processes, be it from a trade finance perspective, and also they've really been at the forefront in terms of making sure that happens. I guess the question to ask here is, how do you ensure that you're compliant as far as, in relation to technology, because we've been used to the manual-based, perspective. I think the digitization of the trade finance and the entire ecosystem, it needs to support and participate with the regulators. So if you don't participate with the regulators, then you will not be able to achieve that. And then you also need to work with the logistic companies, because it requires movement of goods from one place to the other. Banks need to come to the table, and then like a concept that like digital trade ecosystems with secure online platforms will really play a big role there. And this also will facilitate the exchange of data between partners in the trade finance networks. And in addition, it will support and ensure that banks can reduce costs, and the complexity of digitization will end up being simplified. You can see everything from one slate. So using technology, cloud technology has really played a big role in this space, and there are lots of investments going in there as well. And I know regulators have struggled in terms of understanding cloud, so that's a big thing. But I believe they're beginning to appreciate that, and using of AI. So that will be critical, and it will require the regulators to also support us in this and drive the digital adoptions across the industry. I think I was reading, recently, there's a Swiss bank that actually has decided to do away with an economist and use that space and hire data specialists because they see that's what data is about. So if you can't talk about your data, then you can't be at the table. So this is really critical, and in terms of just making sure and everyone understands what this is about. But I think it also requires us as banks to take a lead and share with central banks in terms of setting the agenda, as opposed to the regulator setting the agendas for you, and demonstrating how this will be beneficial to organizations. Thank you.
Thank you. Dorcas, on your side, do you see also regulatory support across Africa to change the laws when needed, such as allowing cloud computing, allowing AI processing, or digital original documents and electronic signatures?
Thank you. Yes, really, Lydia has covered it very well. Of course, indeed, as I said, we are regulated organizations, and definitely any form of conversation we have to, we must always be having a discussion with the regulator, either to approve or to push. For some of these things, to come through. I mean, anyone knows that anytime you have a conversation with a regulator, of course, they want to be on top of things. They want to ensure that everything is watertight. They want to protect the consumer at the end of the day. And these are discussions we've had. And I can say, we have seen a lot of good positive response, especially from our regulators. They are quite well aligned in terms of giving some of these responses. During this time, of course, it has even been accelerated. We are in a time when, we are seeing what we'd call a low-touch economy. And because of that, then more and more, voices, are going up there, to demand for digitization. More and more voices, of course, are also, speaking about it. so that then no one is left out, and so that, you know, every process is improved, and also most importantly to increase visibility for obvious reasons around AML and also KYC. So a lot of that has been supported, and you know, we can say our regulator has been really supportive in the areas, especially where we've been pushing as banks.
Okay, excellent. So we have all the key ingredients. We have the market need, we have the banks, the regulatory willingness, and the technology capabilities to indeed improve the situation, and actually, indeed, as you said earlier, close the trade finance gap, which is the ultimate objective. Thank you. We're coming to the end, and I invite the participants to submit any question you might have. In the absence of questions, I'd like to reinvite Jerry for a final statement, forward-looking statement on behalf of TradeStream. Jerry, can you? And then I will ask the same to Dorcas and Lydia.
Great. Thank you very much, Andre. Now, looking at Africa Trade, the latest statistics that were in the market that were done by Afreximbank in the last almost 9 years, the trade finance gap is just about $91 billion US. And that's huge, and that's the gap. That is huge. Inter-Africa trade is just about 17% of all, all our trade globally. That also leaves us a huge opportunity. I also would like to look at the opportunity as trade finance only contributes to 10%, just about 10% of the average bank's revenue. I mean, we have a whole close to 90% to play with. And finally, banks have also indicated that KYC and AML are the major reasons for rejecting trade finance applications by SMEs. Now, as Lydia and Dorcas have mentioned, SMEs are the next frontier. They're growing very fast. And anybody who's not looking closely at them is likely to be still trading in the 90s and the 2000s, because going forward, we want to look at accommodating SMEs. And therefore, the reason why the opportunity is huge. If we tie up our AML and KYC properly, and of course, other regulatory requirements that have come through, like Basel III, these are best captured while automation is played, and we have all these checked and certified on our platform. We are happy to see that a lot of compliance is met while using the TradeStream platform. So we encourage the banks to embrace technology, especially those applications that are very more dynamic in terms of integration to other systems, like even the legacy systems. The TradeStream application or platform, integrates using APIs. Now we have not much struggles. And since it's a hosted platform, your time to market is very limited. It is very short. We can get you to start checking and the platform to start learning your documents in a very short period of time. We're happy to have conversations with you as and when available. Please shoot through your questions and or send through the email, any of other conversations you may have, and we're happy to share this in more detail. Thank you very much all for attending.
Thank you. Thank you, Jerry. I'd like now, indeed, Dorcas, to share your final conclusion from a forward-looking perspective.
Thank you so very much. Indeed, it was great, having this conversation this afternoon, this morning. And I think what I can say in summary, the landscape has changed. We've got to change with times. We've got to reduce the inefficiencies that we see in our operations for the sake of the customer. And I think it is then very key that we go digital. Of course, most important is we don't do it in isolation. Partnership engagement is a must. Because then for you to be able to have full visibility, then you must engage as many counterparties or as many partnerships as much as possible for you to be able to optimize in terms of data and also in terms of cost. So thank you so very much. It was indeed a great pleasure having, to have this discussion, and looking forward for greater things ahead. Thank you.
Thank you, Dorcas. Thank you very much. And Lydia, on your side, what are your thoughts as concluding remarks?
Thanks, Andre, and the TradeStream team for giving the opportunity to be part of this. I think for me, one of the things that stands out for me is regulation. If you are able to pass through the piece of regulation, then you're guaranteed that you'll be able to reach to your customer. So, because regulation is not going to go away. So it's very important that that particular piece, as you invest in technology, becomes part of that. But I think I'd like to quote the Swiss bank, which indicated that the market is trading on data and not economist views. So it is therefore natural to put data in the driver's seat. So data is going to be key and important, and we need to use it to our benefit in order to deliver growth for our customers and in an efficient manner, and addressing the concerns that regulators put on the table. So technology is actually a big piece that will allow us to address all the regulators' concerns for as long as we can demonstrate to the regulators, and we are the ones sitting at the table and not the regulators sitting at the table. So you drive the conversation upfront. And that way, you will be able to achieve great milestones as far as delivering to our clients is concerned. So thank you very much. And I believe this opportunity will take us to greater heights. Thank you.
Thank you, Lydia. And indeed, I could not agree more that working with regulators is very important. And this is also what ICC and ITFA are doing on various fronts. And that is already bearing results, certainly on the digitization of negotiable instruments, or the adoption of electronic originals, electronic signatures, the use of cloud technology. So as more and more countries are working on changing the laws, and the big milestone we have for next year is basically the UK changing the Bill of Exchange Act in order to enable a digital Bill of Exchange Act, which would indeed offer a far more superior user experience to SMEs in order to get funding, and that will, we believe, have ripple effects in other countries. And the UK will be the fourth one, following Bahrain, Singapore, and Abu Dhabi as a jurisdiction that have implemented the electronic negotiable instruments model law. So very indeed, very important to work in a closely in a partnership way with the national regulators, and that's where ICC and ITFA as global associations can help drive by indeed enabling information about those initiatives to be exchanged, and role model countries or early adopter jurisdictions to be elevated in the market as those to follow. So thanks very much indeed, Lydia, Dorcas, and Jerry, for joining us today. Hopefully we'll be able to come back with indeed results about the enhanced use of technology across a number of trade finance use cases. very happy to plan this in the next few months as institutions progress on various fronts. It has been a delight to indeed organize this with Jerry and Dayo, and we'll be coming back to you in the next few weeks for more. Have a great day, all, and talk to you soon. Bye-bye.
Thank you. Thank you very much.
Thank you all.
Thank you.
Bye-bye. Good day to
Bye.
you.